Good evening, ladies and gentlemen. Hope you're keeping well. Let's get straight into it. No messing about. I want to try a little experiment here. I want to start with this web page and actually see how many people kind of still keep their focus on this, because every single video out there, you normally head straight to the charts, and people are not open-minded enough that there may be other things going out there that are actually driving markets. Obviously, order flow is a huge thing that I talk about. I'm going to try something slightly different just to make people open their horizons a little bit, because you may be not looking at markets in the sort of way that professional traders do, but that's okay. We're all here to kind of open our minds to that. So let's get on with it. Let's look at this. The FOMC meeting is in 8 days, right? This is an absolute crucial meeting. It's not only going to drive the markets in 8 days, but it's already driving the markets a lot in the last week. The market has been rallying a lot, and it's doing that in anticipation of the outcome of this meeting. So let's actually have a look at that. This is all available to everyone. That's what I mean. I just want to kind of make people open their minds a little bit, whether it's looking at order flow and, rather than just looking at charts that lack information, or whether it's even, if you like fundamentals, looking at them in a slightly different way, which I'm going to show you before we get on the charts. And I'm going to get on the charts in a second. Like I said, a lot of people just like to open up their candlestick chart and do whatever they're doing. It's worth taking a step back, because this is actually what's driving the market. So if we actually look at the meeting coming up, this is just telling us the probability of what is likely to happen based on the Fed funds futures, right? You can read that in your own time, it's up there. It's telling us what the market is expecting the Fed to do, right? So there is a 97% chance. Right now we're at 5 to 525. That's the current Fed funds Fed funds target, the interest rate in the US. The chances of a rate hike of 25 basis points in 8 days is 97%. Okay. Of course, there's no guarantees, but pretty much a given that the Fed will be raising rates. So why has the market been rallying? Well, this is what I want you to just be a little bit open-minded to. 99% of people, they'll just focus on the next meeting and say, okay, the Fed is expected to hike. There's a lot more going on here behind the scenes. And again, we're going to get on the charts and do some live trading in a second. But the whole theme of today's video, I want to try a different approach of just opening people's minds a little bit. That, in trading, there's other stuff going on, right, than just what you necessarily see in front of you, like plain candlesticks and whatever. And one of the mistakes I think people make is they do tend to be very short-sighted, right? They look at the next item on the agenda and that's it. What I am trying to do, and the very best performers in the world are doing, is they're looking much further ahead. So I'm looking towards the end of the year. So think about it. We've just said that there is a 98% probability that we are going to go up to 525 to 550 Fed funds rate, right? So we now have to assume that that is the new level at the end of the year. What is the chances the market is giving to another rate hike after that? Very little, 12%, right? And the point is, a week ago, before we had the inflation data came out, it was 20%, okay? So that has dropped, and this is what has been driving the market a lot over the last week, okay? And we are obviously going to look at that in more detail on the charts, and we'll do some trading in just 1 second, as in you'll see my live trading from today. But why has this dropped from 20 to 12, right? You see, there's a lot of analysis we can do before we get on the charts. Like I said, I wanted to try a slightly different approach today. So again, people do have a look at their calendars, and there's a lot of things going on, and that's fine. But again, unfortunately, people tend to lose sight of what's actually important. And really, the market has been focusing on this. The inflation number last Wednesday, 3%. If we actually break it up here, you can see that I think it's 12 consecutive months now. Of course, we have positive inflation, but the absolute number itself has been coming off quite dramatically. That's what's driving the market to feel that there will be no more rate hikes barring the next one until the end of the year, and then possibly rate cuts going into next year, who knows. But this is having a very positive impact on the markets. Now, all my point is, and we're going to get on the charts now, and you're going to see sort of the live trading using order flow and so on, which let me just get to now. There you go. All my point is I just want people to recognize that there is merit in being open-minded, right? Whether it's, you saw the approach we took there to come to a positive bias or conclusion, which we can translate onto our charts, is quite different to what you might be used to seeing. And it's the same with order flow, right? You know, you might be used to seeing plain candlestick charts. Be open-minded that there's a lot more out there than just that, and you know, that's going to increase your chances of success a lot more. Doesn't have to be exactly what I'm looking at here, footprint, depth of market. There's many different ways of looking at order flow. The point is, the way that I was saying, you know, things are maybe not as you think they are. Even when you look at a plain calendar, a fundamental calendar, it's not, you know, what you think it is. That it's just a bunch of data, and you look at tomorrow's piece of data and you go into, you see how much sort of different angles we took there. It's the same with what you see on your charts, and that's why I use order flow, because order flow is showing me transactional data, and that's no different to any other business in the world. Okay, so let's actually now do some analysis, right? Obviously I want to buy the market. I've got a very positive bias based on fundamentally, and there's some other things I do look at obviously in terms of broader order flow, but in terms of the fundamentals, the bias is very, very strong because the market has positive sentiment based on the expectations that we will only have one more hike at the next meeting in 8 days, and then nothing after that. And obviously inflation falling off is the factor that's driving that thinking, right? So really expecting this market to go up, and the thing is, I don't know how much the market's going to pull back, right? Will it pull back to here? Will it pull back to here? Will it have hardly any pullback and then go further? I don't know. Okay, and that's where obviously looking at transactional data is going to help me. It's no different to something like on eBay, where if you, for example, we're going to look at it together. I'm going to hit play. Let me just hit play here. And the market's moving now. Obviously, as always, my live account, you're going to see me execute some trades. This is from today. Just like on any auction site, right? I talk about eBay, but it could be anyone, where you're seeing a lot of perhaps people losing inventory or dumping inventory or selling items on eBay. Let's say this was eBay, right? A market is no different to that. If you're seeing a lot of people selling items and the price doesn't really shift much, well, that's obviously going to make them stop. Not stop entirely, but it's going to make them reduce how much they're selling, because at the end of the day, that raises the likelihood that if they're consistently selling, and the pricing isn't budging, it's more likely to go the other way, right? So it's a different way of looking at it. You know, these things you can obviously takes a little bit of time to understand it, and there's different ways we can understand inventory changing in the marketplace, but it is literally like a real business. So you can see the market has moved down a touch, not as much as expected. And if I just pause this just one moment, what you'll actually see here, probably the best way, I was talking over a lot of it because like I said, I wanted to take a slightly different approach today, but you've seen a lot of selling come in to the marketplace, and the market hasn't really budged a lot, okay? And there's this stuff that you see here below is not anything special. It's really basic, okay? It's literally like having eBay auction site in front of you and having the metrics underneath of how many people numbers of units have sold and how many units have bought, what the differences are between that. It's really simple, okay? So it's literally nothing fancy. You can see the change here in the delta has gone from 585 positive, right? So positive inventory to negative inventory, and the difference between them is 4,000 contracts. So basically there has been a lot of selling. The market hasn't moved much, which has caught my attention because it's making me think, well, you know, we've had a lot of selling come into the market, but we haven't moved much. What's the likelihood that there's going to be much follow through or much interest from sellers if they're not really achieving lower prices? Probably not very much, right? So you see, it's trying to think of the market slightly differently to how everyone else is thinking of it, and obviously hoping that is and that's more likely to bring success, right? So I've got into the marketplace. I am actually again going to play the market, and what you will see, because I don't want to pretend that it's always roses, is that eventually the sellers actually do manage to make some traction. So I've actually had to let the trade go and take a loss. Okay, so I'm going to forward it a little bit here. There you go, you saw that. So a lot of people expectation was, so you can see my stop loss fairly tight here, not much risk on the trade, but obviously below a certain point, I had an expectation that if sellers do manage to push through, I don't want to hold on forever, right? So there had to take a loss, unfortunately. But then if you watch closely, I'm not one to, it's not that I'm not giving up, but I'm not one to then just stop looking at the information still coming into the marketplace, okay? So, or new information coming into the marketplace. So even at this lower level, I noticed a lot of selling again, as we've been seeing all the way down, but again, not much price movement, okay? Now this does take place over a long period of time, but you can see it if you watch closely, quite a lot of contracts selling in this area, and really, again, not much price movement, all right? So we can watch it for just maybe 1 or 2 minutes together, and there you go, you can see quite a bit of selling taking place in this area, but as you can see, the market's not really moving, right? It's not moving down. And you'll see that again, contracts printing 30, 40, 20, 30, 40 consistently, and you can even see it here building up in the volume. 80, 90, again just 120, but just unable to really have much movement down, okay? And you're going to see this just continues on and on and on, fairly straightforward in this area. You're going to see maybe upwards of 1,000, 2,000 contracts trade, people selling in this area, and the market just not moving. New information, which I didn't have, so I get back into the marketplace. There you go, you can see me execute again, and I did end up building up quite a bit of position. So point is, I kept watching the marketplace. Yes, did take a hit in the first instance, got back in, stop loss very similar, you know, very, very little risk on the trade. And then this time, we actually started to get some follow through. You can see it here. If I just fast forward it, all it takes usually is just that initial bout of momentum to come in. And it's actually not momentum, okay? If you think very carefully about why markets are moving up and down, it's actually not, momentum's the wrong word. It's actually these people recognizing finally that, okay, they've got into this trade and it's not really paying them, right? They're not receiving the expected payout they would. Now I'm going to relate it back to business again, eBay. I know a lot of this is quite boring, but to me it's fascinating, and to any business person who runs a business, it's the very sort of foundation of a business. If people are selling, and I said this at the start, right, and the price is just not budging, it's not moving lower, they're going to take their foot off the gas in the expectation that the market is going to go the other way, right? Obviously, why would you keep selling at one price and the price isn't moving, right? This is why I like to look at order flow. It doesn't have to be on a footprint. There's many different ways I look at order flow. I use market profile, I use cumulative delta, I use many different items, and I've got students who, you know, use many different things. This is obviously just one depiction. It's easier for me to show the general public using the raw data that you see here. But ultimately what's happening is these people are starting to give up. So it's not momentum. Momentum will happen afterwards. But everyone's obviously able to see this, right? And initially what was happening is we weren't seeing these people give up. They weren't sort of pushing back, and therefore the resultant momentum never came through. Now what we are seeing is this initial sort of give up of the sellers, and you're now going to see, think about it, if you're a fresh buyer, you kind of want to see the sellers giving up first, right? So obviously what we're looking at here allows us to do that. And don't forget, as mentioned at the start, I have a long bias, and we now start to see, because everyone has seen this, right? Everyone has seen this initial kind of give up of the sellers come through. We're now seeing momentum starting to come through. Okay, so you'll see that here. I took a little bit off the trade, their initial scales, and then it just and you can see this took almost an hour or more to play out. I think it was almost an hour and a half I was sitting in this trade. I did step away for a bit, and the end result was 712. Obviously I'd lost initially just over $1,000, so 712.50 on this trade. A lot of things I've thrown at you there, and the point was not, you know, necessarily to highlight this trade. It was more just to make you open-minded to what is out there in trading, you know, and maybe that what you are just looking at is not the only thing. Okay, don't get too caught up and obsessed with, you know, what's going on in this table or with these numbers. And see, there's time to do all of that. It takes time to learn all these things, just like you wouldn't step into a business, you know, high-level professional business tomorrow and expect to learn it by just watching one video. That's not realistic. All I'm saying is be open-minded. You saw at the start the way we approached kind of the coming environment in terms of the Federal Reserve meeting. We looked at the Fed Funds Futures. We looked at different probabilities that people are placing. Why are they doing that? Okay, there's 20 sets of economic data, but which one is it that they are looking at? Well, inflation was obviously the biggest one over the last week. Okay, does that make sense? Yes, because we saw the probabilities change around the same time that the inflation data came out. Okay, how can we transfer that onto our charts? Okay, maybe we need to have information in front of us that allows us to look at things in more detail. Okay, so very 1, 2, 3, 4, very logical kind of business analytical approach to trading, and that's how professionals do it. Okay, so hope you enjoyed that video. I know it was very different to what you might be used to seeing, but hopefully gives you a little bit of hope that there is more out there than, you know, what I see, the sort of basic stuff people doing, which, let's be honest, the chances of succeeding using a lot of that is greatly diminished. I'm in Dubai for the next 4 or 5 weeks. I'm going to set up out there, go back to doing some of the more fancy videos, you know, just in terms of obviously showing the background. Nothing fancy in terms of, you know, obviously I'm not into all the supercars and all that stuff. I just mean obviously the sort of background where I'm staying, you know, the area and all of that. So a bit more of a normal video. We'll try and get some of those out to you, but I am away now for 4 weeks in Dubai. So how much information I'll be able to get out there on the YouTube channel, I don't know, but hopefully you enjoyed that. If you like it, check out these other videos. All right, have an amazing rest of July, and I'll speak to you soon.